Hello and welcome to another edition of Breaking the Mould. I'm Clara Hermit and with me I have our Investment Research Director, Russ Mould. Russ?
Yes, Clara?
What's the fuss?
Okay, well there's still lots of big picture stuff for everybody to digest. We're still thinking about the US Federal Reserve's monetary policy decision on the 17th, the implications of the Scottish vote on the 18th, that's going to be debated for a long time to come. But from a strictly corporate perspective, we're going to be looking at flooring, soft furnishings and falling commodity prices.
It's a bit of a mixed bunch, isn't it?
Yeah, it's a rum bunch to be fair, but nonetheless all very exciting.
Should we start with flooring?
We shall, yes. The name is Halstead, James Halstead, and it's an AIM-quoted company based in Manchester, though it does have 15 offices around the world. Now, it's an expert in commercial flooring, and given that it's got about a third of its sales in the UK and the rest overseas, quite a good read-through on the global economy overall. Its first half to March was okay, sales at 1.7%. So when we look at the full year numbers due on the 1st of October, I think we'll be looking for a bit of an acceleration there, partly because a summer trading statement from the company actually did flag that April and June had got quite a lot better. So the market's looking for around £225 million of sales and £42 million of pre-tax profit.
I thought that James Halstead was best known for its dividend policy.
Very good. Top of the class. Yes, this is a stat for you. 37 consecutive annual dividend increases. Now, not many companies can say that they've done that. They've already put the interim up 9%. For the full year, the market's looking for 9.3 against 8.75 last year, so another increment. That's enough for a 3.2% dividend yield. Now, not many AIM companies pay that, and indeed not many main market companies do either. And this just goes to show, if you look at Halstead's long-term chart, yes, there are lumps and bumps with the economy, but the long-term performance is very good, and it shows what can be achieved by backing well-run, soundly financed, cash-generative companies, pay a dividend, over the long term. And also don't forget, the CEO of this company is called Mark Halstead. Now there's a clue there, big family stake, he's not going to do anything daft with your money if you're a shareholder.
So if Halstead is all about floors for shops, airports, factories, what have you got for us in the soft furnishings department?
Okay, this is Walker Greenbank, another AIM-quoted company. I confess I'm less of an expert on this particular area of domestic bliss. Interims, again, same day as Halstead, 1st of October. Zoffany, Sanderson, Harlequin are some of the brands that I'm sure you've all seen in John Lewis's when you've been dragged around there on a Saturday afternoon. Selling extremely well in the UK and overseas, where the brands are gathering great traction. Company did talk of, again in the summer statement, of improving momentum. So for the full year, the market's looking for a 40% increase to pre-tax profits around 7.7 million. And Walker, like Halstead, has got a gathering record of dividend payment increases. 0.28p was the interim last time. It'd probably go up this time.
Okay, so we've done flooring, we've done furnishings. That just leaves us with metal.
It does. Leaves us with ore, shock and ore, in fact, if you'll pardon the pun, with the iron ore price going through the floor. Now, this has got implications for FTSE 100 firm Rio Tinto, but also the AIM-quoted company that we're going to look at, African Minerals, that's got figures on the 30th of September. Yeah,
the share prices have been awful. Is that literally just down to the iron ore prices?
It's got a lot to do with it. Iron ore's gone down 40% this year alone, so about $80 a tonne, partly because there are worries over slowing demand in China, and also because there's a big onrush of supply forecast for 2015-16. Now, African Minerals operates and develops the Tonkili mine in Sierra Leone. It's got some problems of its own beside the falling iron ore price, most of which is an enormous debt pile. The market's getting a bit worried about whether it can service it or not. So there's been a new CEO brought in, cash injection into Tonkili from a Chinese partner, which has helped a lot. But when you look at the interims, look at the costs, because they're going to have to come down. Look at the cash flow, because how is it going to manage capex against debt servicing? And also there could be some impact from the Ebola virus as well. So, you know, when things go wrong, they can go really, really wrong, unfortunately.
Okay, thank you,
Thank
Russ.
you.
So that's been Breaking the Mould. We'll be back with you in a couple of weeks' time. Until then, take care and goodbye.